So great. We are also now live on YouTube. In case you want to watch these recording again. So today I just thought to myself, it's been a very interesting week. I think the whole of last month, this month, has been interesting for us because I've had so many calls, people calling me, just asking me, Lawrence, how can I buy Dogecoin? And I asked them why Dogecoin. They don't have a reason. And I just thought to myself, why do we take actions? It has to be triggered by something. And of course, when you're taking an action and it's triggered by fear of missing out, which is FOMO, most of the time you get wrecked, and especially because of volatility in the crypto space. So I think I've had over 10 people calling me, asking me, how do I buy Dogecoin? How do I buy Dogecoin? For those people who are new in this podium, these Bitcoin 101, welcome. If this is your first time, welcome to Bitcoin 101. It's good to have you around. We do this every Saturday, these Decrypt Edge consultants, and we do this just for educational purposes. We are not here to promote any company. We are not here to sell anything. And my topic for today, which is the do's and don'ts of crypto trading, was brought about by the question I've been asked by so many people. Show me how to buy Dogecoin. Just a history of Dogecoin. Dogecoin started as a joke coin. It's a meme coin, if you all know what meme means. It started by the people who were in the crypto space, and they started it as a joke. And of course, we've seen Dogecoin rise in price since 2018 to date to very high prices. Some people are predicting it's gonna hit $1, and it's amazing. So people have been calling me. People I've interacted with before. They're calling me and telling me I want to buy Dogecoin. And it just it's funny because these are the same people I told 2018 to buy Bitcoin at $3,200. Yet today Bitcoin is at 50. I don't know 50 what? Let's see how much Bitcoin is today. I haven't checked. So 1 second. So Bitcoin today is at $57,000. I remember telling people to buy Bitcoin before it was $10,000. So why should somebody who I told to buy Bitcoin at 3,200 and right now is at $57,000 call me and tell me, Lawrence, I want you to show me how to buy Dogecoin. Why Dogecoin? And I ask them, why do you want to buy Dogecoin? And this is the reason as to why today I want us to just go into deeper understanding of what are the do's and don'ts when you are coming to cryptocurrency trading. And like I said, I'm not a trader in the cryptocurrency space. I'm an investor. There are people who are traders. They make money. But for me, my strategy is not anymore trading. I go for long-term investments. So let me share my screen so that we can get started. The do's and don'ts of crypto trading. The do's and don'ts of crypto trading. So allow me in 1 second to share my screen. 1 second, so that we can get started. And it's exciting to see all of you. In case you have somebody you want also to join, you can share with them the link. Just share with them so that we can learn all of this together. So allow me to share these. I hope this is visible to all of us. And these are the do's and don'ts of crypto trading. I know there's this hype of every person is posting the is posting the wins. And I tell people, don't follow social media because nobody posts the losses. We all want to post the how good we are doing. And if you follow social media, you will always lose. I lie to you. You always be on the receiving end. So I tell people, just see, if you see somebody successful, don't ask them. Don't see them as they are at that particular moment. Ask them the journey, because it's in the journey you're gonna learn a whole lot of things on what to do, what not to do, and stuff. So I tell people social media is just there to entertain. So don't invest using social media. You're gonna get wrecked. So moving on swiftly, today's topic: the do's and don'ts of crypto trading. I hope we can all see that. And of course, I start by sharing crypto trading. Of course, a lot of us who've been in this for so long, we always say this is the wild west of the investment world. There is no denying it. The cryptocurrency market can be volatile place, and this is why I tell people, especially those people who have done forex before, and they come to the crypto space, they're like, I just want to learn the small nitty gritties of crypto trading. I've done forex, and I'm like, these are like forex. Forex, somebody gonna dictate the opening market price and the close market price. In this crypto space, there's no person who wakes up and says we're gonna start at this and we're gonna end at this. It's dictated by the market. You cannot celebrate a 10% price rise in crypto space because it will do 10% up and does 30% down same hour. So again, these are some of the things I tell people. You're gonna come in the crypto space with that learning mentality, because if you come with the forex kind of trading, this market is so volatile. It's so volatile that crypto trading can wreck your wallet. So of course, the value of cryptocurrencies such as Bitcoin, Ethereum, Litecoin skyrocketed back in 2017. And I'm sure for those people who are in the space back then, you remember February 2017. Bitcoin was below $1,000. December the same year, Bitcoin was $20,000. And I've met people who bought Bitcoin in December when the prices were all up there. And then what happened in 2018? Plummeted into 2018. And since then, we've seen a jagged rise in their value. During 2019, it was a roller coaster, just going up, coming down, going up, coming down. You buy, it plumps. You buy, it pumps, and then while you want to exit, it plumps again. It was just an emotional journey. So of course, I tell people, making sure you have proper, well thought out strategy is crucial if you're ever going to make a profit for trading digital currencies. And just to share with you, myself and Louis, we started with crypto trading. And of course, we learned our own lessons, and that's why we moved to crypto investments. We went through the whole process of seeing an account with over 10 plus $1,000. The same 1 hour is below $3,000, and you can have high blood pressure if you don't control your emotions. So with that, I want to share with you this chart, and I like it because if you get to understand this chart, you won't get wrecked in the cryptocurrency space. This is a chart that happens not only in the crypto space but also in stocks, in real assets, any investment that you have. And of course, we have the steep phase. And steep phase is where the smart money comes in. I usually tell people steep phase is for angel investors and innovators. These are people who have the idea, and then a few people who believe in their idea and they put their money into it. It's very hard for you to find angel investors. People like Jeff Bezos, Elon Musk, Warren Buffett, Chairman. These are angel investors. And if you've been following Silicon City was built where, like, if you have an idea, in a startup and stuff, you go there and you find people, you table your idea, they will buy it. This is called steep phase. And I think you maybe also watched this documentary called The Shark Tank. These are angel investors. They look for good ideas. They put in their money over there and they enjoy the ride, or maybe at times the losses. So that is steep phase. After steep phase, we have what we call takeoff. And takeoff, this is where now we have the awareness phase. And of course, awareness phase, you'll find a lot of institutional investors coming on board. So if I may put now these into Bitcoin and cryptocurrency, for the last 10 years, it was the steep phase, where like no institution, no bank, it's only nerds and people who like us who are willing to really take risks who went into the steep phase. And it was a lesson kind of time. Now, right now, if you look at the media attention, We are where media attention is right now. Everybody's talking about Bitcoin. Everybody's talking about Dogecoin. Why? Because the institutional investors, they're putting their money into cryptocurrency. But now ask yourself, are they putting their money in other cryptos or in Bitcoin and Ethereum? That's now what people miss. And allow me to even talk about this. Elon Musk, I really respect this gentleman, Elon Musk, because number one, you can even buy Tesla car using Bitcoin. He's always tweeting about what? Dogecoin. How come he has never accepted Dogecoin as a means of accepting payment in his Tesla or wherever? Something to ponder about. And then he said what? I think 2 weeks ago he talked about, I've never sold my Bitcoins. He openly says he owns Bitcoin. These are people who put their money in smart money. Now, institutions are coming on board. Elon Musk as a person, smart money. Tesla as a company, he owns it. Institutional investors, they're coming. Now, what happens? Media attention. And I think this is the reason as to why the last almost 1 month, people are calling us. Can we invest in Dogecoin? Why? Because it's getting media attention. Now, what happens after that? We go to Mania Face. And Mania Face, of course, there's a lot of enthusiasm, and then the public come. And when public come, the thing that follows is greed. Greed. Oh, Lawrence is posting that he's made $100,000 in Dogecoin. Oh, Luis is posting he's made $1 million in Ripple. Why? Public. And what happens? If they can do it, the mentality is, I can do it too. So greed comes. And then after greed is what? Delusion. And then new paradigm. New paradigm is where the market now starts correcting. And there's number one, denial. And then we have a bull trap. We return to normal. People continue putting in money, return to normal, and then fear. The markets are crashing. Fear, capitulation, desperation, and we return to mean. And if you don't really understand that from mania, we go to blow off face, you will always find people saying, like people who got on board 2017 December, they are always cussing saying Bitcoin is a scam. It's not a scam. You bought at a high, you sold at a low because you didn't have the patience to wait for it, and you called cryptocurrency market a scam. It's only that you totally made an investment out of hype. And these are the things we're going to talk about today. So what are the don'ts of crypto trading? What are the don'ts of the crypto trading? Number one don't is that don't trade without a plan. Don't trade without a plan. And of course, I like this analogy. You leave your house, you get into your car, you want to travel to the beach. You have no idea how to get there. So you start your engine and being aimlessly driving, just aimlessly driving without looking at maps, road signs, or asking the guy walking his dog with a newspaper under his arm, how long will it take? You will be lucky even to get close because you just left aimlessly. You started a journey without even looking at any map. So you would aimlessly throw money into crypto trading, and this is what a lot of people do. You want just to make an investment without a plan. Now, the foundation of any successful trader, whether they are into crypto or not, is having a solid plan. Details where they are and where they want to go. That's number one. Where am I financially? Where do I want to go? Now, the other thing you really need to think of is, how are you going to get there? How are you going to get there? Number one, you know where you are, where you want to go, and how you'll go there. Now, before you place any single trade, you need to ask yourself, what your main objective is and how are you going to complete it? What is my main objective? Why do I want to buy Dogecoin? What is my main objective? Yes, this will take some time to construct. Research will be involved. But if you're trading without a plan, what you're doing is simple: gambling. It might seem boring to some, but this step is crucial. Failure to prepare to fail. Failure to prepare to fail. And I guess this is one of the reasons a whole lot of people are falling into scams. Why? Because we are lazy. Human beings, our nature is that we want to earn before we learn. We want to make it big even without doing any research. And it's so unfortunate. And this is why you'll find a whole lot of people telling you, or come, we can trade for you, we can do ABCD, and you think, okay, let me just pass this burden of me going to research and stuff to somebody else because they're gonna do it for me. No. Number one, know where you are, where you want to go, and why you want to get there. And once you do that, of course, we'll go to the second don't. What don't you want to do when you're doing trade? It's trading without a stop loss. And I guess we'll have a class on trading techniques and stuff maybe next week. And of course, a stop loss, this is like your seatbelt on the road to victory. Avoid placing one. Now, this is where again I say, a lot of people, I'm sure, those who have not like done crypto trading, you're asking yourself, what is a stop loss? Maybe you don't even know what that is. So I'll just say, avoid placing one and you won't be a crypto trader for a very long time. There's bound to be a few hiccups when you are investing for profits. I'm sure it's crazy, obvious. Setting a stop loss will remove you out of trades that aren't going your way. And like I said, this is how crypto space works. You can have a 10% up, 30% down, same like even same 1 minute. Volatile. It's very volatile. So you need to know what are these stop losses people keep talking about. So if I'm going to become a trader in the crypto space, there are things I need to take time to learn, and then I can remove the L and I say now I'm earning. But most of us, we want to earn without even taking time to learn. So a stop loss helps you exit a trade that is going down without really having to suffer a lot of losses. You're the one who sets this. So setting a stop loss will remove you out of trades that aren't going your way. For example, you buy one Bitcoin at $9,000. You put your stop loss at 8,000. So this is where you're willing, if the market's correct down, you're willing to lose $1,000. Okay. So if the Bitcoin value drops to 8,000 MEP, you'll be automatically pulled out of the trade before you lose any more. That's a stop loss. When it comes to setting a stop loss, you want to keep in mind that you want to lose around 1 to 2% of your capital per trade. Though in the crypto space, I don't really believe in this because it's very volatile. -1, -2, it's nothing. In fact, it can happen like in a second. And now, for me, what will happen is that, especially if you're trading smaller amounts, what will happen is this. Every trade you enter, there are fees. So if you place your stop loss very close to, so that you don't want to lose a lot of money, what will happen is that you keep on getting into more trades and more trades and more trades. What is happening? More fees and more fees and more fees. What is happening to your wallet? It's getting raped without you getting to know about it. So if you're starting with $1,000, for example, if you do 1 to 2 -1 or 2 stop loss, we're talking about you're losing about $10 to $20 per trade. So that's number 2. Number 3, choose cryptos. Don't choose cryptos you haven't researched. And I think if you've been following us on Bitcoin 101, we end by saying what? DYOR. Do your own research. Do your own research. So I like this. Aha, all right. Just listen to this. So your mate cousin found this crypto that's gonna do. Just 1 second. I'm still getting people on board. So just 1 second. So your mate cousin found this crypto that's gonna do massive moves over the next month. Perfect. Your mate cousin might be an expert. So go ahead and buy up as much as possible. And you insert loud noises and big red X's. Before investing in anything, you need to know everything about that asset. And you've noticed most of the time people ask me, Lawrence, what do I invest in? I tell you, I don't give any recommendations. Why don't I give recommendations? Because you have to understand everything about an asset before you invest in it. Number one, who is behind it? What is its purpose, the use case? What plans do the team behind it have for the future? Don't buy any crypto asset without knowing all the details about it. Again, taking time to do research will enable you to make a well-informed decision as opposed to blindly following the crowd. Now you understand the reason as to why I don't give recommendations on cryptos, on what cryptos to buy. Because I might tell you to buy Dogecoin today, and then tomorrow the hype ends and it corrects 80%. Your $1,000 is at $200. Who are you gonna blame? Do your own research. So number 3 is don't choose cryptos you haven't researched. Don't follow these YouTube guys and social media people telling you, oh, this crypto gonna hit $10,000 and stuff. Number 4, don't be impulsive buying the hype. And with the hype comes FOMO. FOMO, fear of missing out. And I have a very nice, I think as I'm ending, I'll come back to FOMO because I think this is what controls a lot of markets. And we really need to understand that you need to control your emotions. Let me just go through this. Not to be confused with the stuff on top of your cappuccino. This stuff can be real, this FOMO, fear of missing out, and has led many people down the dark and gloomy road to disaster. Avoid these like plague. It's not too easy to become that dog who chases cars down the highway, only to find an unfortunate fate. I mean, who doesn't love the sight of a crypto skyrocketing and imagining the huge profit you'll rake in by jumping on the grave train without a moment's thought? The key is to be on board the gravy train before it leaves the platform. So ensure you thoroughly research the crypto you want to invest in before buying, instead of acting on impulse. Trust me, you'll get caught out big time in the long run. And I think some of us who've been in the crypto space for a while, we've suffered this, not once, not twice. I can tell you for a fact. We've suffered this not once, not twice. Where like you're following this crypto, you take like maybe a week or two, it's still pumping. Before you know it, the crypto is up, and then you come on board and you get in. By the time you're getting in, the crypto corrects downward, and then you didn't have stop losses. I talked about the stop losses, and then you find your wallet is wiped. And then you say, these things don't work. Do your own research and don't follow the hype. I'm gonna come back to the FOMO in details. So the do's. The do's in the during crypto trading, number 1 is diversify. Variety is the spice of life. I usually tell people there are over 6,000 cryptocurrencies, but I like what one of my mentors says, 80% of these cryptos will never see the end of the day. Why? Because number 1, not that they are scams or shitcoins, no. Maybe along the way, there will be better cryptos that have come to compete with them. Number 2, maybe along the way, the developers have an argument or disagreement and they part the way. Number 3, maybe there were outright scams. They didn't have any use case and their time has ended. Number 4, maybe they lack they lack the things that will make a crypto really get adopted, like the marketing, funds and everything, and they give up on a project. So these are some of the things I tell people. If you're diversifying, take time to research so that you also don't diversify in shit coins. Okay, spreading your investments across a range of different assets is key to being successful in the crypto trading world. I tell a lot of people, you can buy Bitcoin, you can buy Ethereum. Those are the 2 biggest cryptocurrencies we have in the space. They've proven the test of time. But most of these other cryptos, you need a whole lot of research before you get into. So as your mom would say, do not put all your eggs in one basket. Trust what she says. She says this to you. When you're placing trades, don't go all in one trade. Instead, place smaller portions on an array of different digital currencies. This way, if one crypto tanks, you won't risk losing out completely. The likelihood is that your other investment will keep just fine, and you'll be giving yourself more opportunity to profit. But don't just buy shitcoins, because you might also think of like, okay, one of the do's is to diversify. So I'll just go maybe to Binance or any other place you want to trade, and any crypto you see over there, you just go and buy. trust you me, you're gonna get wrecked. Remember, key thing: do your own research. Don't just invest blindly. The other thing is risk management. And of course, we touched these already in terms of stop losses. You're gonna understand the risk management techniques, which include setting a stop loss, knowing your exit. You should have a plan. Like, I'm getting into this trade. How much do I want out of it? A lot of people just buy cryptos for the sake of it, but you should know your exit point also. It's a strategy. I'm putting $1,000. How much do I want to make out of these $1,000? How much am I willing to risk in this kind of a trade? So these are some of the things I usually just tell people. You're gonna have a strategy. Know the in and have an in strategy and out strategy. Because if you have all these crypto you're trading and each keeps on doing maybe for example you have $100 and you put a stop loss of 10%, which is what? $10. And you do trades, maybe 6 trades that do stop loss, it means you're minus 60. So you're only remaining with $40. So it's good also to really know, am I just profiting or am I just making losses? Because a lot of people think, oh, I've made 10% here, but I did minus 30 here. And you don't keep on checking how much is it even the fees are taking when you're doing those trades. So I usually tell people, trading without a strategy is just like gambling. You're just putting your money on a casino, and you don't want to really have a strategy of looking at this is my capital. I'm getting entry here. This is my stop loss. This is how much I need to make. Such a strategy will help you to know and to safeguard your capital in the long run. So keep in mind your maximum loss per trade, the number of consecutive losses you'll accept before taking a break and revising your strategy. So a strategy is very good. Know when to enter, know when to exit. Number 3, is check on BTC movement, the highs and lows of Bitcoin. I think this is key because Bitcoin is undoubtedly the flagship of cryptocurrency. I think you've seen these. I think 2 weeks ago, Bitcoin did minus 8, minus 6, minus 10. Some of the cryptos did minus 30. So we call them oscillators. Cryptos that follow Bitcoin movement. But you'll find that when Bitcoin is moving down, cryptos will do maybe, if Bitcoin is doing minus 5, cryptos will do minus 20, minus 30. And most of the time, if you don't have stop losses, if you are an active trader, you're gonna get wrecked. You're gonna get your wallet, diminishing in terms of your capital each and every other time. And you also see that most of the time when Bitcoin is going up again, the most relevant altcoins will always be going up again. So these are some of the things I tell people, and especially if you're trading and Bitcoin is your trading pair, and cryptos go down. Remember, if Bitcoin is going down and these cryptos are also going down, you will see like you're losing more in terms of your capital holding. So have this in mind that put stop losses and also keep on checking the trades of Bitcoin because it will help you also know your entries and your exit, because most of these cryptos follow Bitcoin movements. So keep on checking on Bitcoin movement. And then another is determine your strategy. Are you trading short term? And this is something now I tell people. When I started this podcast, I talked about what? Myself and Louis, when we started crypto, we were traders. We were daily traders. We'd even like enter a trade for hours. But right now we're investors. I'm no longer a trader, and this is the reason I find it so hard to tell somebody how to trading. Me, I'm long term. I think long term, 6 months, 1 year, 2 years, 5 years. I'm still there. I'm waiting. Why? Because number one, I've done the research, I've done the analysis, I've gone all out to understand what is happening in the project that I'm putting my money, and I'm willing to see even minus 30%. Because I know after minus 30%, even 6-7 times, I can get whatever excess in this kind of a trade because it's a good project to invest in. So determine your strategy. What technical indicators will you be using? Now we are getting into more details when it comes to trading. RSI, MACD, EMA. I think one of these fine days we're gonna do a trading lesson for all of you, so that you can understand what these RSI, MACDs, and whatever are. So another thing is that will you be using a trading bot? I think maybe Louis will be sharing more on trading bots. For me, it's a no-no. I don't think those. I was about to use another word, but I don't think they work. I'm still waiting for somebody to show me a trading bot that works. So for me, I prefer, if you're trading, do it yourself. Put all the strategy yourself. Don't let a machine do this for you. Do it for you. I don't need trading bots work. So this is something you might decide before each trade. Deciding these will enable you to clearly choose what strategy you use, whether you're trading short-term and long-term. Like I said, for us, we are long-term. We are no longer short-term traders. Because of volatility in crypto space, I don't think crypto trading for short-term is really profitable. Unless maybe, for me, I usually say, unless you're trading a lot of, you have a lot of, what is it called? You have a lot of capital. If you have like $1 million and Bitcoin goes 10%, that's good money. Okay, it's good money. So again, I say, decide each trade. So and what strategies you use. So I tell people, for me, I think long term more than short term. Bitcoin and cryptocurrency space is not a get rich quick scheme, and this is why people fall for scams. So we don't give any recommendation. The other thing you don't do is that don't be greedy. And I think this is one of the emotions that people gonna control as I almost come to the end of my sharing today. The biggest enemy of every crypto trader is greed. You should follow the limits you have set. Remember strategy, whether it's relating to profit or losses. If you don't take profits or follow stop losses, you could end up worsening your financial situation. So don't be greedy. It's an emotion that if you don't control it, you're gonna get wrecked. And the other thing is, do not think guarantee. I don't know where this came from. People are always looking at, tell me what is the guarantee, and there are no guarantees in life. There are no guarantees. I usually say, and most people agree with me, there are only two things that are guaranteed in life: death and taxes. So any person who comes to you and tells you, we guarantee you 1%, we guarantee you 2% per day, we guarantee you 10% per week, we guarantee you 40% per month. Really? Which business is that? And what do they use to really have these guarantees? So it's one thing that you really need to have in mind, that there are no guarantees in cryptocurrency. The same is true of any kind of investment you make in the stock market. Only with cryptocurrency being free of centralized regulatory bodies, the play basically is unpredictable. Therefore, cementing the no guarantee statement, and kindly, my dear friends, stay away from fixed return investments. There is nothing like a guaranteed income. So all these online people telling you you'll get 1%, you'll get 2%, trust me, nobody posts failures. Nobody. Nobody posts how many hours they sit working on any research or anything. But we all post those big cars, we post those big houses and stuff. Some people even post holding a lot of money, stash. Oh, I made this from forex trading or crypto trading. Don't believe everything you see, because there's nothing which is guaranteed. And I say this with a lot of passion because I know a lot of my friends who've lost quite good money because of running to guaranteed kind of investment. And it pains me, because all it takes is for you to just buy that crypto, hold it for a few. And remember, you're dealing with an asset. This is the other thing I'll tell you. You're dealing with an asset. You cannot buy land today and expect to sell it tomorrow. Have that kind of mentality. So the stakes are much higher. Don't let this scare you. Instead, let it motivate you to be an objective thinker in the domain of digital currencies. What you should do is to have your own trading plan by studying the trading mechanism of your cryptocurrency of choice. anticipate both gain and loss, then learn how to become a better trader. I hope you're finding value in everything we are sharing today. And like I said, before I get going, I want to share one thing before I leave. And I think this is the biggest thing in the crypto space: FOMO. So allow me to come here and share with you something about FOMO, fear of missing out. Because if you really don't take care of these, uh, you're gonna get wrecked. And especially if you are a newbie in the crypto space. Those people who've been asking me whether I should buy Dogecoin and stuff, this is for you. And this is the reason as why I never answered you. So, how to deal with Bitcoin FOMO? And not only Bitcoin, how to deal with cryptocurrency FOMO. And I don't want to read all these. I just want to go straight to what is FOMO. What is FOMO? FOMO is an acronym for fear of missing out. I'll just read through with all of you. FOMO is an acronym, and we can share these all these links if you so wish to read it for yourself. So FOMO is an acronym for fear of missing out. It's a kind of fear that has driven people to make grave mistakes, lose all their monies, fallen for scams, and made people miserable. Please read that. I can highlight that for us. It's the kind of fear that has driven people to make grave mistakes, lose all their monies, fallen for scams, and made people miserable. FOMO is a term mostly used in Bitcoin and cryptocurrency. It's that feeling you have when you feel everybody around you is enjoying something you aren't and something you have missed. And this is the reason that's why people are asking me, can I invest in Dogecoin? You feel like you're missing out? Now you get to understand where you're at. FOMO. The anxiety then clouds your decision and pushes you to make certain irrational decisions that may be detrimental. A practical example of FOMO in Bitcoin is when everybody around you buys Bitcoin when Bitcoin price is around 5,000. Then it starts rising and gets to about 10,000. You feel you don't want to miss out on the opportunity. Instead of studying the trends and analyzing the market, then you put your money to buy it at the moment, which can be a very bad decision. Now you understand the reason as to why I never answered any person who asked me, can I buy Dogecoin? And I kept on asking them, why are you buying Dogecoin? So FOMO is that intuition that tells you to buy coin regardless and without a plan. Now that you have an idea of what FOMO is, how does it affect you as a person? How does FOMO affect you? FOMO can affect you in different ways, but these 5 ways are major ways in which FOMO affects you negatively. Number 1, FOMO affects your decision-making skills. Emotions of greed and fear. It will affect your decision-making skills. Number 2, your mental health can be also affected. It can cause anxiety and depression. And trust you me, I think crypto space is where you can get ulcers and high blood pressure faster than any other, space I've been into. Number 3, it can make you lose all your hard-earned money. I've met people who have lost fortunes, and their stories is just, it's disheartening. Number 4, it can make you miss out on opportunities. Why? Because a lot of people who missed or who lost money in 2017 because of FOMO, today they still believe Bitcoin and cryptocurrencies are scams. They are missing out on what is happening across the globe. Number 5, you can fall for scams through FOMO. You see, everybody is making it. You want to make it as fast as you can. You want to beat around the corners so that you can also join the club of Lamborghinis and multi-billionaires in crypto space. You'll fall for scams. And how do you know you have FOMO as a person? People that are affected by FOMO always follow the crowd. That's number 1. You follow the crowd. They don't have the luxury of having a well-scrutinized thought. They just go with the flow. You can know you have FOMO when one of these questions keep lingering in your mind. Question number one, what if Bitcoin grows past this? I think this has happened to all of us. What if Dogecoin hits $1? A lot of people are asking themselves that. Number two, why shouldn't I be able to guess Bitcoin price right? Because at times you feel like I enter at the wrong time, I get out at the wrong time. So you always ask yourself, why me? Why is it I'm the only person who doesn't seem to get these prices right? That's another question you always ask yourself if you are in formal mode. Number three, what makes people that are making a fortune better than me? And these I'll tell you for a fact. Remember, nobody posts their failures. If you're following people online and they're showing you, oh, I made $1 million, ask them how much have they lost before they made that $1 million. So this is a question that will ring up. You watch, everybody is looking good, they are looking lovely, they're making a lot of money, and you ask yourself, what makes people that are making a fortune better than me? Questions that you ask yourself when you're falling into FOMO. Then the other question is, why shouldn't I try? People asking me about Dogecoin. The question is keep lingering in your mind. Why should I try? Why shouldn't I try? Why shouldn't I buy Dogecoin? Why shouldn't I buy Dogecoin? And the other thing is, you keep on, are you telling me all these people buying it are wrong? FOMO. Now you justifying. See, these guys are showing they're buying Dogecoin and it's going to $1 or whatever, and you're justifying that. You keep on asking yourself, you think they are wrong. Here are some of the questions that you ask yourself. How do you deal with FOMO? How do you deal with FOMO? Number one, as I come to conclusion, you need to accept that some losses are inevitable. And I think this is a very good point you need to know. That at times you make profits and at times you lose money. If you come in the crypto space with that mentality, you're gonna make a fortune. Number two, you're not the only one. Like I said, not everybody posts their losses. Social media is there for us to post all that is good that is happening in our lives. And these might lead you into thinking that you're missing out. So don't follow these. Just know you're not the only one who is missing out on any opportunity, and there will always be other opportunities coming. Number three, remind yourself there are scams out there. And this is key. This is key. The more you FOMO, the more vulnerable you are to fall for a scam. The more you FOMO, the more vulnerable you are to fall for a scam. In fact, scammers wait patiently and prey on people that FOMO. Scammers understand the market and they try to make a plan as convincing as possible because they know you are overwhelmed with how you don't want to miss out on the opportunity. Read about FOMO-based scams. You can read about these FOMO-based scams and you'll understand how scammers capitalize on FOMO. When you have FOMO, remind yourself that there are scammers out there waiting for you. And I think this is a very good strategy when you're getting into crypto space. Always think that somebody is out there looking for you, for your cash. Before you agree with that 1x or 40% or 1% per day or 2%, do your own research. And remember, scammers have understood the market better than you. And they'll come up with any kind of program to get you to fall for what it is they're selling you. Number four, take a break. Whenever you feel you have FOMO, possibly because of the price of Bitcoin rose to an unexpected level, the best thing to do at that moment is to take a break from trading and engage in other activity. I think these are some of the things we did a lot when we were moving from trading to investing. To become investors. And I remember there was a time we would just close your laptop and you just go take a book and read because it's too much. That emotion of like, I'm missing out, it can wreck you. So things may not work as you may have planned. Take a break, take a walk, play games, see movies. This is not the end of life. More opportunities will show up. You are constantly learning. You won't miss out on the opportunity next time. You won't make the same mistake twice. In fact, just to say this, I usually say you don't lose what is not yours. You'll never lose what is not yours. One of my mentors told me that. What is yours is yours. So don't FOMO. Don't follow these online stuff. The other thing you need to remember is that you're not always right. And this is why I tell people, nobody is an expert in the crypto space. Market decides where the markets are going. So you're not always right. Your subconscious can be wrong and your intuition may fail you. It's done this so many times to us. No one knows the future in certain. And this is why I tell people, when you buy into guaranteed incomes with that certainty of 40% per month, what is that? Who can be that certain for the future? So your Bitcoin price prediction can be wrong. It has always been for so many times when you make trades. All these make us human. And even billionaires that make billions of dollars from it make mistakes. Therefore, always know that you are not always right and you can make mistakes. And I think this is one key thing why myself and Louis, we don't tell people what to buy, because you cannot always be right. You can't. Number 6 is that always analyze your mistakes. Analyze the mistakes you've made and the mistakes other people have made, and you realize that most mistakes result from questions listed above and from the questions of what if. Avoid them as much as possible. As then I come to the conclusion between FOMO and cryptocurrency or Bitcoin price is that the volatility in Bitcoin price and cryptocurrencies is one of the primary reasons people FOMO. The moment the price trickle, people always jump onto the opportunity to buy at low prices because they don't want to miss the opportunity. They do these without conducting adequate research to know if the prices will continue to fall or not. In conclusion, these are the few ways you can deal with FOMO, and always remember that this is an opportunity and many opportunities will come forward. So those are some of the things that you really need to understand when you're doing crypto trading. And I know I've taken a whole lot of time. I hope you found value in what I was sharing today. If you need these, you can always drop it over there. And don't follow these guys who are always out there. So I want to just pass the mic to Louis so that he can tell us what is happening in the crypto space at the moment across the globe. And also, I do believe that he's been answering any of your questions on the chat room. Continue asking the questions over there. I'm there just in case you have any question. So Louis, take it away. Share with us what you have for us today.
All right. Yeah, thank you so much, Lawrence. That was a very insightful session. I believe you've been taking notes. You've been self-analyzing yourself, where you are in all these space of crypto. Most importantly, take your time. There's nothing late. We are in it for the long term. At least we are. So maybe one thing before I share my screen on the news that actually stood out this week. They've been out of news in crypto, but I usually just like picking the key news that maybe is important based on where we are sitting. Actually, the path we've chosen for being investors is just our sweet spot. Everybody can make money from anywhere, so we are not like discouraging people not trading. Trading makes money, so you can. I think the one is what do you based on what you've analyzed. So please don't mistake us. Trading is a good venture. In fact, you can make a lot of money, but it requires discipline. And I think last was I think 2 weeks ago, we talked about something about investment and patience being partners. They all go together. So if you want to be a trader or anything in not only cryptocurrency, you need to have patience. So that is what maybe I wanted to add on what Lawrence has said there. So there's a couple of questions. I think I'll tackle them at the end of the session. So let me just go right and share my screen. So keep answering, rather keep asking the questions in the chat. Then we'll tackle them together at the end of the session. So I hope you can all hear me. Maybe let me just, okay, so the things I think you can hear me. So the first news I think that I came about today was about, as you can see on the screen, Australian Senate committee calls for national blockchain land registry. So you see how other governments out there are actually embracing blockchain or rather cryptocurrencies by and large. So Australian Senate Committee, that is as per Cointelegraph, one of the news outlets we normally follow. Also, you should actually be reading such websites to get insights of what is happening. So the Senate Committee of Technology and Finance wants lawmakers to establish a national blockchain registry. Knowing that we're in Kenya, I think we had some talk about this, but it died out. I don't know where that went. I think even in the other report done by, I think the blockchain, was it blockchain committee in Kenya? They recommended such, but recommendation and implementation, I think, are two different things. But you can see these guys here, they're already now getting like to the books. So an Australian Senate Committee has published a report calling for blockchain-based national registry, better clarity over laws relating to smart contracts, and continued efforts to establish international standards for DLT, that is distributed ledger technology. So this is how, I mean, I'm sure very soon, in the next couple of months, you'll see them actually implementing such laws that are enacted. Moving on to other news, still on Bitcoin, almost half of Bitcoin hash rate signaling taproot activation. So this is it's basically one of the upgrades that Bitcoin normally goes through. As much as people are talking the price, there are people actually working on the tech side of Bitcoin itself. These are the as you can see over there, major Bitcoin miners have begun signaling for taproot activation that will improve scalability and privacy for the largest cryptocurrency by market capitalization. So this is where actually part of what we do also is to look at the tech side of Bitcoin. We're not actually focusing on just the price alone. We are looking at the tech implementation part of Bitcoin. So that is actually one of the key updates that is happening up this year. So the road to taproot upgrade finally upcoming this year is already underway with major BTC mining pools already signaling support. So we have very many miners, rather companies running this form of computation. Actually, I don't want to go right there now, but just know there's an upgrade coming to. Think of it as a software upgrade to Bitcoin happening globally. So, and for that to happen, most miners must agree to that upgrade. That is what we call a consensus. That is what I think we'll leave it there for now. But I just know on the tech part of it is what is happening. And the key thing is it is focusing on scalability and privacy of Bitcoin. Moving on, I think we have been talking about NFTs for the last couple of weeks. I'm sure most of us know UFC. UFC is one of the popular fighting. I think it's a combination of kickboxing, martial arts. It's more or less it's a sport. So, and actually it is actually usually watched by very many people across the world. So they have the Ultimate Fighting UFC has signaled their intent to get involved in NFTs. So in brief, the NFT has filed 2 patent applications to get on board the NFT bandwagon. So the UFC heavyweight champion, that is Francis Ngannou, has already released his own NFTs. So we have seen, I think we talked about Kipchoge here releasing his own NFT. Francis, I think he comes from Cameroon. He comes from Cameroon. He's actually the current heavyweight champion. I'm sure most of us here have watched some UFC matches, but it has huge crowds. It has huge viewing. So that tells you how broad cryptocurrency is going to attend to a bigger nation. We've seen also NFTs on basketball, on baseball, on golf. So we are actually interesting times. That for sure I can say. Another one, I think tomorrow you can bet on Elon Musk talking on Dogecoin on this Saturday Night Live. It's a session that happens on Sunday. So he'll be talking on that show tomorrow, and I'm sure he will be talking about Dogecoin. So depending on how he'll talk, you will see some, of course, price action on Dogecoin. I don't know, I don't recommend, but based on your research, based on your intuition, you can actually decide to trade that. I think Lawrence shared about FOMO. One thing about FOMO is that they normally say you buy the news, you buy the rumors and sell the news. That is what happens. And these are practical I mean, that's what it means. So think the mind-loving dog father of Tesla CEO will follow through his Dogecoin thesis when he's hosting Saturday night. Actually, it's today, which is actually Sunday in Kenya, because it's in the US. So in brief, an online sportsbook is taking wages on whether Elon Musk will mention Dogecoin during his weekend Saturday night hosting gig. You can also bet whether Dogecoin price will reach $1 by Monday. Yeah, so that's what is called what hype. Buy the rumor, buy the hype, and sell the news. This is what is happening. So I'll be listening to it myself, because I think I follow Elon Musk, one of the key people that are doing actually great in terms of business and also developments. Moving on, JP Morgan Chase, that is the biggest bank in the US. The CEO, Jamie Dimon, claims clients are interested in Bitcoin. And you remember very well, he's the same guy who's been bashing Bitcoin for the longest time. Now he's saying, clients are the ones actually interested in Bitcoin. And they're actually developing products that are going to support Bitcoin trading and Bitcoin custody keeping with the bank. So his comments came after it was reported that JP Morgan would introduce Bitcoin, introduce a Bitcoin fund this summer. That is what it says. However, despite the bank embracing the largest cryptocurrency, Dimon continues to dismiss it, explaining that it is not his job to decide what JP Morgan clients are doing with the money. Yeah, so it's interesting. I don't tell clients what to do. It's their job, my job, to decide what they want to do with their money. So these are clear indication on pressure that is coming from his clients, not him. So Dimon sticks to pro-blockchain narrative, while he's reiterating that he's not interested in the technology main use. But I mean, if JP Morgan as a company is making profits, as a director, he's get to enjoy that. And he gets to say, as I finish on this part, blockchain is real, we use it. But people have to remember that a currency is supported by the taxing authority of the country. Okay, that for me is wrong, first of all, by a military authority, by rule of law, a central bank, which meant not to debase it. I'm not a Bitcoin supporter, I have no interest. So actually, he says a couple of correct things about currency, which is the US dollar. As you can say, you have to remember that a currency is supported by the taxing authority of the country, by a military authority, by a rule of law, and central bank. This actually reminds me, that's the dollar. Actually, that's why the dollar is where it is right now. It is because of those 3 or is it 4 reasons that you mentioned, and that's why it's not a supporter. But anyway, that's a story for another day. You can, if you actually want to read most of these links later, you can actually ask for them. Then we will share them. Moving on, the other bank similar to JP Morgan is called Goldman Sachs. Again, Goldman Sachs launches new Bitcoin derivatives. So derivatives again is coming to cryptocurrency. The last time we heard about this was, I think, in 2017 when there was the Bitcoin run to 20,000. So US banking giant Goldman Sachs has started offering Bitcoin-backed deliverable forward contracts. Let me just zoom that in so it's a bit clear. Yeah, so that is towards investors, according to Bloomberg news site. So it relies on CME Group's Bitcoin futures to hedge against the cryptocurrency infamous volatility, because that is what actually, this has been the biggest impediment to cryptocurrency volatility. That is what actually that is the narrative that these banks and the big institutions actually talk about. Volatility, it's not backed by anything, but now you see them, they are actually getting on board it. Moving on to some other news, there was a survey done by MasterCard just last week, and it says that 40% intend to use crypto for payments in the next year. That is as per the MasterCard survey. So for any business who is on the payment industry, this is actually a huge opportunity. That's why they are not sitting aside. They're actually working on products to support this. So the millennials are big on crypto, with 77% wanting to learn more. And I'm glad we are all here today, and I'm sure we are learning about it, and this will actually get bigger. So a survey by credit card giant MasterCard has revealed that 4 that 4 in 10 people plan to use cryptocurrency for payments within the next year. So that is what the survey done, and I think these are actually good data of course, in Kenya or in Africa, it may be different because of the different in demographics, but that is a good indicator to base on. So maybe if I just read the one paragraph of this, it revealed that millennials are especially engaged in cryptocurrencies, with over 2/3 or 67% agreeing they are more open to using cryptocurrency than they were a year ago. Additionally, it reports that 77% of millennials are interested in learning more about cryptocurrency, while 75% agree they will use digital assets if they understood them better. So what is the gap here? Just learning. Once they learn it, of course, you'll be getting a lot of now new money coming into the cryptocurrency market. Moving on, still in the US. So US Bank allows to allow Bitcoin trading in 2021, says NYDIG executive. So US lenders are keen to get onto crypto trading action, and could soon allow customers to buy Bitcoin right from their accounts. These are the same people who a couple of years ago they were against anything to do with Bitcoin. Now they're like, oh yeah, you actually if Lawrence can remember, we should tell people that the day the bank will start selling you Bitcoin, just know that you missed the bandwagon, and this is actually starting to happen right now. People who refuse to buy Bitcoin, now the same banks are the ones going to sell you the Bitcoin, of course at a premium, not at the market price, at a premium. So the era of American banks regarding cryptocurrencies as evil might be coming to an end. That is according by CNBC, who says that NYDIG is going to actually actually as this was over there. The new digital investment group has inked a partnership with the fintech staple Fidelity National Information Services, better known as FIS, to provide a framework for US banks to offer crypto trading to their customers. So again, that is quite interesting. Moving on to Latin America, largest Latin America e-commerce platform adds 7.8 million Bitcoin into its treasury. So you can see how other governments, other bodies actually buying Bitcoin to hold for the long term, not for the short term, for the long term. So the purchase makes the e-commerce platform the 36th publicly traded company to add Bitcoin to its balance sheet. So these are, of course, quite interesting news from institutional perspective. So the company called, or rather the institution is called Mercado Libre, the largest e-commerce platform in Latin America, has announced to the US Securities Exchange, that is SEC, that it acquired 7.8 million in Bitcoin in the first quarter of 2021. That is the first 3 months. And now they are saying it was any publicly traded company ought to report their investments, and actually they have done so. And this actually that shows you that institutional interest has been quite big on the crypto. So, as quoting one of the people from the company said, as part of our treasury strategy, this quarter we purchased 7.8 million in Bitcoin, a digital asset that we are disclosing within our indefinite lived intangible assets. So that is again good for me. That makes me happy knowing that people are now shifting their idea. That is actually one of the topics of it's the topic of Bitcoin on One, the digitalization shift. That is what is happening. So the other news: Nasdaq listed car insurance company Metromile adopts Bitcoin. So that is another insurance firm in the US that is actually opening its doors for Bitcoin. I mean, who would have imagined this? So Metroline, a pay-per-mile insurance company, announced Thursday that it will allow its customers to pay for premiums in Bitcoin. So again, that is quite good. I love the sound of that. The San Francisco headquarters insurer will also let policyholders receive crypto for their claims. Again, you can make claims and receive the claims in cryptocurrency. So in addition, it's going to buy 10 million worth of BTC this quarter. That is again another investment or other cash that is coming to cryptocurrency. So shares of Metromile are trading on the Nasdaq Stock Exchange after it went public through a SPAC merger deal that is this February. So that is interesting. So moving on, DeFi, more disruptive to banks than Bitcoin, says ING. That is one of the biggest bank, I think, is it in UK? So let me just zoom that in. So ING deep dive into DeFi includes a case study for lending platform Aave. So Aave is one of the cryptocurrencies that are listed within the cryptocurrency ecosystem. So DeFi basically stands for decentralized finance. Decentralized finance. Maybe for those who are new on this session. So DeFi is a short term. So it says, I'm sure most of us know. Actually, it's a Netherlands-based ING bank has been analyzing the risk and opportunities associated with exploding decentralized finance space. So a paper released last month titled Lessons Learned from Decentralized Finance carefully weighs some of DeFi's pros and cons and concludes that the best of both worlds is achieved if centralized and decentralized finance cooperate. I think that is actually an interesting approach from one of the oldest banking institutions. So that is good to note. Towards the end of the new session, I think let me see what's there. So on top of that, rather to add more weight on that, World Economic Forum blockchain says blockchain could disrupt 867 trillion in traditional markets. Let me read that again. World Economic Forum says blockchain could disrupt $867 trillion in traditional markets. So the opportunity could be sustained for an already fast-growing crypto industry with the current market cap of about 2.3 trillion. That is the current crypto market capitalization. So this was actually in Davos. That is actually so. Let me just read that. All assets will eventually be tokenized, from stocks to bonds to commodities. At least that's the perspective of many crypto industry executives who predict that most, if not all, of modern finance will eventually run into digital rails, just put in the blockchain as it were. So that is again another validation about confirming that almost everything will be tokenized, and tokenization comes with blockchain technology, and that's actually why that's the industry that we are. So part of let me just read the last part. So what perhaps most notable about the 100-page report is the length to which the authors go into estimating the potential size of the traditional markets that might be ripe for disruption. So these are it broken down. Equity markets about $95 trillion. Debt markets about $106 trillion. Security products 10 trillion. Derivatives 560 trillion. So securities, financing, repurchase agreements, and all that amounts to how much? And lending about 2.9 trillion, almost now the market cap of cryptocurrencies. Asset management and fund administration, that is 89 trillion. So that is how big crypto is going to disrupt, and that is actually for anybody from where you're sitting, that is huge. That is huge. But where does it start? Start with the basics. Learn the fundamentals of it. Don't just go all out. So towards the last part of I think I have 3 more to go. So Ripple, that is one of the alternative currencies that has been actually making news in the last couple of days. It is actually the top 4 in terms of market cap, which is actually the value of it all. So Ripple Q1 report, number of XRP whales increased despite lawsuit carousel. So whales are people who are buying, or rather they buy big amount of cryptocurrencies at a go, either buying or selling. You find somebody selling like $10 million worth of XRP or Bitcoin or Ethereum at once, or they sell at once. So that usually causes a price shift in the cryptocurrency space. And for them, despite people facing a lawsuit from SEC, the company has reported a surge in the number of XRP whale wallets. So this is actually one of the indicators that gives you that despite the ongoing court cases that is going with Ripple, some people actually have making a bet that they will win the case, and Ripple will, as they say, it will go to the moon. So we'll see how that will happen. So from an investment perspective, you ought to do some analysis. Then you can decide to take depending on how much you're willing to lose. So that is with Ripple. Moving on to other news, to India this time. So National Payments Corporation of India says it will not ban cryptocurrencies though through UPI. So India has been known to make very stunning announcements about cryptocurrencies, banning them, saying they'll arrest people, they'll jail you, but now they're saying, no, we'll not ban them. So India's Payments Authority, that is the National Payment Corporation, as reportedly said that it will not ban cryptocurrency transaction. Banks are to make their own decision whether to allow crypto transaction, which is actually an interesting view, owing that now, for me, maybe this may not go very well because they may frustrate people. But anyway, it's still good despite not banning. So the NCPI has refused to ban cryptocurrency transaction. A local media reported on Thursday. So NCPI runs the Unified Payment Interface, that is the UPI, an instant real-time payment system that facilitates interbank transaction. So I think in Kenya, this is like now PesaLink. If maybe I make a comparison, it's like PesaLink. So they are the ones who like make payments across the India. So it is regulated by Central Bank of India, and they have been told now, or you decide whether you want to support or not to support. So that is actually an interesting view, and I think it's actually positive for the crypto space. Turkey, I think we spoke about Turkey for the last couple of weeks by banning crypto. Then again, saying they want to offer guidance. Now they are saying they're not saying exchanges must report transaction over $1,200. That is as per the finance minister. So the country is rushing to regulate crypto market after 2 local exchanges went offline in April. So again, these are some of the risks that happens in crypto. That's why I'm saying, not your keys, not your coins. Remember, you have to always store your own cryptocurrencies depending on the size. So if you are a trader, of course, most of your coins will always be on the exchanges. But if you are holding Bitcoins or other any crypto for the long term, ensure that you are the ones who is holding them. That is what I can maybe you can take home. So the Turkish crypto exchanges will have to report that is exceeding that's about $1,200 to financial authorities under upcoming AML regulations, according to Turkish finance minister. So I think these are very it's a good approach. It's a sober approach, not to like miss out on the whole train. So the Turkish government voted to swiftly regulate the local crypto industry after 2 local companies shut down, of course, with a lot of people's money, and actually, I think they were arrested actually. So maybe they will be. I think some of them were arrested, some are still on the loose. So I think that is actually good from where we see that is actually good news. To the US, before we finish, so the SEC chair, Gary Gensler, recommends Congress to regulate cryptocurrency exchanges. So we are now talking about more of regulations. That is what you can see. Everybody is trying to have a regulatory standpoint, not to ban it, but have a fair play field about cryptocurrencies, which is actually good, and that is where we are right now. They have been pushed to do that. So there's really no protection around fraud or manipulation. Gensler said in his first public hearing since taking the reins at the agency. And maybe for those who don't know, Gensler used to teach blockchain and cryptocurrencies back in 2014 at the University of that is MIT. So he understands blockchain and cryptocurrency on the tech perspective, also on the fundamental perspective, which actually makes him a very good crypto. I mean, that post actually fits him, and I believe we will see growth in cryptocurrencies now from the US because US is the biggest market, and that's why that is good for crypto. As we end, right here in Kenya, I think this was yesterday. Kenya Capital Markets Regulator wants better coordination with other bodies when testing crypto assets. So again, this is another positive news coming from the the SEC in quotes of Kenya, that is the CMA, saying that, let me just read that, let me see what they said exactly. So yes, they said this an area of key interest to the authority given its investor protection mandate, also given the prevalence of scams on this forefront. So at least they are perhaps sobering up to the fact that they need to come out and offer guidance, not to like shun look away, but to like give a guidance on how people should trade or that should deal with cryptocurrencies. So the CMA's latest commentary on the price follows the release of that is Capital Market Sounders report, that is Q1 by a company called Chainalysis, that reported that Kenya is the top 5 in global trading activity. So Kenya top 5, of course, from that is with Nigeria, with Ghana, with South Africa, and I think which one else? I think South Africa, Nigeria, Ghana, and Kenya, and I think at Uganda. So those are the top 5 in terms of crypto trading activity, and that is actually that is globally. That is globally. Sorry, that is globally, not in Africa. So that is actually quite interesting that now they are like, okay, we need to have a look at this. So I think with that, that actually ends my session. I hope you learned value. If you want to basically get to read more, just request for the links. Let me check the questions as I come to the end of the session. Let me see. So let me start with, I think it's Dennis Makio, who had asked about diversification. He had asked, does diversification of crypto assets reduce risk really work? There is a higher correlation between, okay. So Dennis is asking whether it's actually a smart idea to diversify. That is his question, the way I've actually seen it. So from where we are sitting, I think for you to diversify, of course, you must have, it depends on how much you have. That is number one. It depends on how much you have. If you have, I mean, good holdings, then you can diversify. But if you have $100, I mean, really, so is that practical? You can't really diversify. But the more you grow in crypto, the more you want to diversify. That is what you can say. And if you are, let's say, in real estate, if you are in the stock exchange, if you are in your other business, it's one of the diversification vehicles that you can actually diversify. Maybe 10% of your holdings into crypto. Then once the 10% grows, again you now diversify into other cryptocurrencies. So yes, it actually works. We've seen it. We know it works, but it depends on your capital level that you're talking about. Dennis, again, you ask, how do we trade cryptos? So for you to trade cryptos, you need an exchange. That is like a cryptocurrency exchange. We have Binance. We have like more than 100 exchanges. But what will give you confidence is what we call liquidity. You need to be trading in a exchange that has liquidity, because you want to sell something and there's nobody to buy, and you want to buy and there's no one to sell. That's why I think one of the exchanges that we normally recommend is Binance, because it has most trading pairs, which is actually the next question that I think you had asked. So the other question you had asked is both profit and loss calculation. Okay, so in forex, I think you are saying you deal in pips, meaning I think the ups and down. So in crypto, it is actually more similar, but maybe different wordings. Because if you buy, let's say, Bitcoin today, or rather, if you bought Bitcoin, actually, let us use Dogecoin. If you bought Dogecoin in January this year, that means you are up, I think, almost 200. Is it 200% or 300%? That is actually what now would amount to a pip. So meaning you buy low, sell high. So that is as simple as that. And I think I'll share the link for Binance for those who maybe do not have an account with Binance. You can let me share the link. So the other question was, is crypto traded in pairs like FX? So crypto is traded in pairs, yes, but with Bitcoin, Ethereum, USDT, BNB. So you have very many trading pairs, actually more than 1,000 pairs that you can trade with. But of course, the bottom line is liquidity. That is, you need to have good liquidity. And the last question is, I think from Dominic, says those banks have used influence to, okay, I think that was a comment. So you're saying would transform it, okay, so yeah, I think, yeah, okay, Well, at the end, of course, CBDCs, that is a central bank-based digital currency, is a centralized system. So really, you are still making a copycat of the system. That is why for us, it's good to, I think Lawrence, you had asked that. Okay. Okay, I think, let me just read that properly. Okay, it will not transfer Bitcoin into a centralized system. That will never happen. What will happen is that they have their own CBDCs that are coming up with the central bank-based digital currencies. So those are the centralized assets that are actually being used, even in China. So not Bitcoin, maybe the other cryptocurrencies. So the last question from Dennis says the Federal Reserve a couple of days up to the same percent, and okay, yeah. Yes, it will affect investors in the US. Kenya, of course, we don't have any laws. First of all, of course, you have to pay your normal taxes, but there is no clear laws on how you pay your taxes in crypto. That is what I can say. But in the US, I think Biden just increased the tax bracket to anybody earning more than $1 million. You have to pay, I think, is it at 7%? So, of course, that covers crypto as well. So I think that does it for me. I think that does it for me. Let me take the hosting rights back to Lawrence. Thank you very much. If you have any topic ideas for the next week session, always be glad to hear your ideas. So thank you, and bye-bye. Let me share the hosting rights back to Lawrence.
So thanks, Luis, for that. There's one question that was sent on direct message by Rafael. He's asking, can I set a downside stop loss so that my stop loss is equal to what I bought the crypto to avoid any losses? What you're saying is that if you buy at 100, you want to have the stop loss at 100. It's not possible, bro. You have to do it lower than the buying price. That's how the stop losses are usually set. So you have to set it lower than the buy price. I think also I have some exciting news because I think some of the there's something I think Louis missed on the news I had shared with him, and it's about these mobile loan apps, which is I think is a major kind of thing in Kenya, and I think maybe in Africa, where people do borrow some money using mobile apps. And I think all of us have heard of Tala. And I saw this news just the other day that Tala is just let me just open this. This is quite good, interesting news, because if you're there, you're still thinking cryptos are still a scam and stuff. It's time to think now that even your mobile loan apps, they're thinking of partnering. Look at this. Visa partners with fintech startup Tala to drive crypto adoption in emerging markets. We all know Tala is one of the biggest loaning app here in Kenya. So you can imagine what this means. It means now you can even now be able, using Tala app, to buy cryptocurrencies. And I saw this as very interesting because I was just having a discussion this week with one of my friends, and he was like, I don't still understand cryptocurrency. And this is a gentleman I've been talking to about crypto since 2018, I think, when Bitcoin was around 3,000. And he still cannot bring his brain to the fact that the world is shifting and it's going. And just the other day, his bank called him and they were like, you have a lot of money in your bank. Can we just put it in the fixed deposit account so that we can give you some money because you're not doing anything with it? And I was telling him, if you don't understand crypto, take time to learn, because it's just out of learning you're gonna know whether you will get into crypto or not. That's number one. So education first, information first, and that's why Decrypt Edge is here. We are here for education. So I just thought to myself, because a time will come where the same bank where he has his money will now tell him, we can sell you Bitcoins. But the fact will be they'll have purchased those Bitcoins using the money he's saving there. It'll just be a swap of him getting his own money and being charged for it, which is so unfortunate. And this is why I encourage each and every other person. Get out there, learn about cryptocurrency. Get as much information as you can. Don't believe in these hyped social media stuff. Do your own research. Ask the right questions. So with that, I think we've come to the end of our session today. It's been a pleasure. I hope you've learned a lot. The do's and don'ts of crypto. Don't FOMO. Do your own research. Have a strategy. Have a game plan. Don't just go in for the sake of it. Avoid scams. Ask the right questions. Take time. Remember, learn, then remove the L, you'll earn. It takes time. Rome was not built in a day. Also, wealth creation is hard, man. If it was easy, most of us would be billionaires. That's why we work each and every other day, because we know it's not going to happen. So with that, I do appreciate your time. This is recorded, so you can just follow our Telegram page, also YouTube. You can just go subscribe, watch our previous Bitcoin 101s. If you have any suggestion of any topic you want us to take you through, we're gonna research and we're gonna come back with whatever you need to learn. I hope you're finding value. God bless you. God bless your businesses. God bless your families. And let's keep learning. Earning will happen at the right time. Have a great weekend.